Good afternoon, this is Javier Baez. We are showing the video for April 8. Now the market's open today with not a lot of small gap, I would say. We had a gigantic gap last week on the SPY. If we check the gap that happened here from Thursday to Friday, this was a quite significant gap. I would say this gap is gigantic. So this gap happened last week, at the beginning of last week. So today we were excited. We had no idea if it was going to gap a lot or not. As you can see, the market closed at 288.57 and it opened at 288.10. So it had actually a lot of selling during the pre-market hours. Now the futures were negative. We were expecting I would say we're expecting a doji day at best, but then somehow the market recovered. Anyway, with the Elliott indicators, we placed a few trades. We actually placed 3 iron condors, so that's like 3 times 4, so that's 12 trades, plus another 3 put spreads. And the reason we did this, like these iron condors already expired, so these are gonna expire worthless. Now this week I'm traveling, I'm in a hotel. I'm not trading a lot this week. I'll be starting trading aggressively again. Last week our total revenue was roughly like $1,200, so we are excited about that. If we check the revenue so far, it's $976, so that's good. Last week we had a good week. We showed a very exciting end of the week, so you can check the video that was uploaded. Now, the Elliott forecast, it's forecasting a good day tomorrow. It's forecasting a high up to 289.63 cents. The lowest value would be pretty much the open of today. We can see this red bar here. And with the Elliott indicators that I'm programming, I still have to add a little bit more, but then it's divided in two. One is the end of day feature, which essentially shows the peak and the throws, which it's the basis of the Elliott theory. So we can see now we still have more programming to do. We still have to, I'm actually reprogramming this from another language, so it's a lot of work that I'm doing. But then anyway, here are the alarms that I have. As you can see, we almost ended up, this actually got a little scary towards the end of the market day. It almost hit our point where we would have to be either assigned stock or just see what happens. I usually never expire in the money. I've learned my lesson, but if it expires by 1 or 2 cents, I don't really maybe I don't get assigned, so that's another part of trading options that you might want to play. As you can see, there was we are also programming part of the Elliott theory, which is like the zigzag indicator. So this is a zigzag. It looks back, it never looks forward, so it's very good programming. And then we had 1, 2, 3, 4, 5, 6, 7 lengths of resistance. First resistance happened at 654, 656. Again, this is Pacific time, so this will be 954 New York time. And the latest bullish indicator happened at 1232. So again, that's 332 New York time. Signaling that there's strong momentum. We expect this momentum to continue. The wave was pretty steep starting at 9 a.m., but we sold a call here. Actually, we sold 3 calls here. We sold 3 puts here. So this was what I do is, like, at the beginning of the day, around 7:30 or so, I saw the forecast, and the forecast was showing was predicting that these will hit a total highest value of 288 and something. So I just added like an extra half a cent or something just to be away from trouble. So that's essentially how you use this indicator. This is not, you shouldn't use this indicator and then immediately sell an iron condors at this value, because this is actually forecasting where it's actually going to hit. So if you want to sell let's say you want to sell an iron condor, then what you want to do is sell something like this. I'm just going to draw something really quick. So when you do an iron condor, then you want to sell something that has those amounts of like that.